So, ladies and gentlemen, welcome to our meeting. Today is a wonderful day. We broadcast from Monaco, and we will have a special show, and we will speak about strategies for investment. We will discover together which are the best investment at the moment and what could be new for us in the market. But before to start, let me introduce to you my colleague, like always, from Monaco, André Perry. André, how are you today?
I'm terrific, Gianluca. Look, thank you for the wonderful introduction, and thanks for all the viewers. It's going to be an exciting day today, actually. We're going to be talking, as you said, alternative investment strategies and how we can make the bespoke difference. So really excited to have the guys on board.
And we had a wonderful show Saturday with our friend from New Zealand. And today we will be together with some friends from London. But before to start with them, let me introduce to you all our colleague from Anchor, Robert Anthony. Robert, how are you?
Hi, nice to see you all again. And to say, I hope you've been enjoying the program. Effectively, TV Art Live and Lux TV, Italy and Monaco are great channels. And what I found very interesting was that I had phone calls and people from all over the world, from Panama, and of course, we know the Kiwis in New Zealand, but London, Miami, South Africa, France, believe it or not, even Switzerland and the Middle East. So I recently, even this morning, had one from the Middle East, actually. So just to say, there's quite a large sector of people listening, even if they're not listening all today live. We're here to answer your questions. We're here to help you. And I'll pass over Gianluca to introduce our guest today, who's Ankush.
You know why, Robert? To be seen is our slogan. And if they know you, they buy from you. So let's introduce today our man, our bespoke man. He will speak about investment. He's an expert. He will tell us his strategies, and he will introduce us his company from London, Bespoke Connection. Welcome, Ankush Mehta. How are you?
Hi. Good afternoon, everyone. Good afternoon from sunny London.
Sunny, that makes a change.
No, we've had a great British weather since the lockdown started.
Okay, so Ankush, explain who you are in a little bit. Yeah.
Just a second. Before to introduce Ankush, I would like to show to our friend a musical introduction, and after Ankush will introduce himself. Okay,
great.
Just a moment. Go from our back office. So the art of investing in today's market. Ankush,
I've started saving, Gianluca. I've started saving to do it. Ankush, explain a little bit who you are and Bespoke, please.
Thank you very much. And first of all, thank you, Gianluca, and the TV Art Live team for having me. My mother always had a dream to watch me on TV, and I hope she's watching it while she's in India. So
that's the day.
fingers crossed. Thanks for fulfilling her dream.
And that's our slogan at the moment. Make your dream fulfill your dream. So
make your dream
totally spot on there.
We make your dream reality.
Make
Yes,
your dream
yes.
reality. That's our current slogan. Okay, go ahead,
So,
Ankush. Explain who you are.
just a quick background on myself. I'm originally from India, born in India. I have two equal halves of my life. First 21 years in India and the second 21 years in London. Bespoke Connections, founded in 2012. We're London headquartered, boutique investment consultancy, connecting 600 plus ultra high net worth family office institutional investors across 11 countries. Wide range of alternative investments, but we try to specialize in certain niches, which we will talk about in a few bits. So investments including fund, direct, co-investment.
And Ankush, what made you decide to do this? What triggered it?
I think the 2008 crisis was the beginning of it. And then by 2012, we realized that there was a marketplace needed where ultra high net worth family offices who like to be very, very private, not disclose much about themselves, can access off-market, interesting alternative opportunities. And that
So
was
how would you, Ankush, differentiate between the crisis you lived in 2008 and the one today? What would you consider different?
Very interesting. I mean, it's if I was just briefly using an example of real estate as an asset class has a very different opinion from the 2008 crisis, because real estate was one of the contributors to it. Right now, real estate is not a contributor to this particular crisis. And I will, I think, further talk about the different alternative investments. But, you know, it's unprecedented times. We've all
well,
had
you
to...
say that, but Ankush, Colony Capital announced today that they're having to offset a lot of their distressed debt property portfolios with Accor and things like that. So there is a different problem, because in 2008 we had the subprime residential property issue, but now we're having sectorial problems on the property market. So do you not think that the property market is also integrated generally into this problem?
Of course. I mean, I think the difference is 2008 was a financial crisis. This is a very big global crisis where lots of businesses, lots of sectors have had an impact. I don't think there's any sector which has not had an impact. But, you know, in our business, we have a very interesting saying: behind every threat lies an opportunity. And, you know, our teams work really hard. We have actually been more busy in the last 2 months. Inquiries from asset managers, fund managers who plan to raise money this year. A lot of them are inquiring our services because everybody is in panic mode and everybody needs cash to support their portfolio companies to get out of this crisis. So
basically, Ankush, your clients have really continued during this confinement to work with you. How do you do that on a practical basis today? Because what is your business model to make this happen?
Yeah, so we have two types of clients. One are fund managers or direct investment opportunities who are actually looking for capital. And then we have ultra high net worth family offices which are looking to invest that capital. So both have dealt with this in a very different manner. The fund managers, obviously they have a number of, one duty of care is towards their investors. They have to make very, very fast, decisive adjustments to changing circumstances, and then very quickly communicate those transparently to their investors.
So just stop there a second, Ankush, for our viewers to actually understand. When you're saying they, is there any critical sizes, or generally speaking, I mean, the size of your management investors, obviously, if you are an enormous fund like Colony Capital, you can't be as flexible and move the boat as far as if you're a smaller investment fund. So your typical client is the large ones, the small ones, or what is your focus to the marketplace?
It is a mix. That's why I was speaking generally, but we do specialize in more boutique fund managers. So we avoid the first-time startup funds, and we avoid the very, very, very large, the whales in the market. So really focus on the mid-tier segment. And then obviously generalizing because we work within private equity, venture capital, real estate.
Now, for some of our lecturers or viewers who are not as educated in the cliche words, could you just kind of explain what type of investments, sizes that would mean as a fund, and what type of size investments that would mean as a viewers? Because yes, this is focused very much Art TV and Lux TV on ultra high net worth, but we also need to understand from a viewer's point of view as to the size of client that you're referring to rationalize what you're saying.
Yes, no, good point. So the fund managers on the smaller side would be 50 to 100 million assets under management in total. And the larger client we have is probably around the 20 billion mark, assets under management. Okay. And of course, spread across the 3 different alternative sectors I mentioned. And then from the high net worth family office community, we hardly deal with anyone less than 50 million assets under management. And I think the largest single family office we deal with is 52 billion assets under management.
And they've worked regularly with you and listened to what you have to say, or your organization as being considered serious people in what you're doing?
Yes, interestingly, we've had more dialogue with them in the last 2 months because they are looking for some interesting pockets of investment opportunities which they can take advantage and invest in.
Now, is there a minimum size to invest, Ankush, or can people invest? I mean, you're saying 50 million. Does that mean I need to invest 5 million to be involved in one of your private equity opportunities or funds? No. Or so what would your starting size be?
I would say 200,000, 250,000 could be the bare minimum.
Okay, so it's reachable to a lot of people. Yes. And does this cost a lot of money to do, or is it what would it cost an investor to do that?
Again, varies what kind of funds they're going in, what kind of investment opportunities they're going in. A lot of family offices are choosing to do a lot of direct co-investments alongside the funds. That's been a very favorite topic in the last few years as well. Very hard to generalize it, but you know, the investors have flexibility, and fund managers are becoming more flexible in this current climate. So the minimum ticket sizes we have seen dropping, whereas funds were looking at 5 million minimum tickets, they're now considering 1 million. The ones looking at 1 million are now dropping to 250.
So you've got a little bit of everything in the mix.
Yes, yes.
So if one of our viewers contacted you and said, could you have something to interest, you have something to interest for everybody?
I think so. Depending on
their... But are you actually seeing... Sorry, Gianluca, you want to say something?
I have a friend that would like to know if, for you, Ankush, do you prefer today any countries more than others?
Yes, so we have tried to keep our focus. We can't do everything. We are still a very boutique company with about 15 people. We can't cover the whole world, but you know, we have very much focused on developed markets from investments we source. So UK, US, Western Europe, Central Europe, or developed Europe. We are looking at Central Eastern Europe at the moment as well, because there are pockets of opportunities coming up. We don't really touch emerging markets. That's just not in our business model, because like I said, we can't do everything. And I think we will be very much focusing on those markets as we speak: UK, US, developed Europe.
Ankush, I want to interrupt you there. Sorry, I'm giving you a hard time, but it's important for our viewers. You're saying UK. UK is a bit of a delicate issue at the moment with Brexit and the way they've been managing things. Are you seeing that that's not a problem? Or what is your view? Or are you seeing other opportunities perhaps are more interesting? Take, for example, Andre from New Zealand. He may say, well, listen, you should be investing in my country, or maybe we should be investing in Scandinavia. This influence on the UK, I'd really like to get your feedback for people as to their body feeling on the UK, because that's quite an important issue for everybody.
Yes.
Yes, no, I think it's a very good question. I mean, right now, our focus, before we look at geographies, is more looking at niche opportunities which are robust and probably will survive and do well in the market. then we connect it to the geography. So, for example, if we talk just about real estate, and I'm happy to go more in depth into the real estate right now, one opportunity or asset class within real estate, which has come out very strong, very much in demand, we have investors inquiring about it, is industrial logistics and warehousing. And even if you look at UK, the supply demand matrix, retail assets were showing a bit of weakness already prior to COVID-19 in the UK and with the Brexit. On the other hand, alternative sectors such as residential or healthcare were expected to be resilient. To give you some stats, UK had 16 failed deals in total, compared to Germany only had one in the last couple of months. Deals fell through. UK shopping centers, prices fallen 50% since 2014, particular risk of decline. But at the same time, UK warehouses has risen by 25% over the same period.
In other words, be sectorial.
Yes.
And you still think there's opportunities. And Bespoke can source those opportunities?
Absolutely. We have live clients within industrial, warehousing, logistics. We have a very popular client in UK. We have a very popular client in Germany, Europe. We are now looking actually for that type of client in US as well. Tesco, for example, big brand in the UK, has temporarily retaken possession of 2 very large properties in UK to deal with the spike in orders they're getting. Supermarkets,
we had that
place to store.
Yes, André, you wanted to say something.
Yeah, we've seen that trend when I used to run the Staples business, and in the UK, we saw that trend of these large companies centralizing their distribution centers, centralizing their transportation. Irish companies are also centralizing their DCs into the UK. So that's a massive opportunity. You just have to drive up the Middle Breach. They're up past the areas up past north of London. You'll see the massive distribution centers being opened up by the large companies and centralizing everything to 2 or 3 locations. Makes complete sense for those opportunities for investment.
Now, Ankush, are you actually then seeing people change their strategies and actually restructure what they're doing financially? Or I know you're saying go into sectors, but since the last 2 to 3 months, what would you have actually identified?
So if I now speak on the behalf of the investors, family offices, ultra high net worths, we noticed a 3-stage mindset. And literally we have noticed these 3 stages in the last 7 weeks. Stage 1, which happened, I would say in March or beginning March, was panic. Investors absolutely panicking. And the first thing they wanted to see is what happens to their current portfolio, their current investments. The equity markets were down hugely. Then the oil price went down. So a lot of the impacts on their current portfolios were there. Stage 2 then very quickly turned into accepting and adapting the new norm. And stage 3, which we have now seen already in May, is some financially strong family offices or opportunistic family offices are looking to take advantage and looking for interesting opportunities. Without naming anyone, but giving you some examples. Last week, I got contacted by a prominent family office saying they're looking for distressed technology opportunities. So any strong tech companies which had underlying strong technology, had revenue, good clientele, now in a little bit of trouble because of the COVID situation, but underlying are very strong. They would like to invest in that because they think they can invest now at a good valuation. Deals which people could not get in.
Before we go into the sectors, I think it's important to understand whether you consider in the strategy people are changing short-term or medium or long-term strategy, how people are actually identifying. Because if we look at the 2008 crisis, we all came out of it. Okay, so are you actually seeing people with a short, medium or long-term view? I think we can come to the actual individual issues
Yes.
as we progress. But I think it's important to understand people's general thinking.
So the investor base we deal with is mostly what we classify as sophisticated investors. So they're not your absolute high street, high net worth retail type client. They're sophisticated investors. And we've noticed that they're typically long-term and patient investors. When they invest in something, they're doing it for quite a few years, not quite a few weeks or months.
With or without debt, Ankush?
Both. I mean, so in real estate, they will have some leverage of debt, which again is another topic, because I spoke to a few banks and they have changed LTVs, at least in the UK, I have noticed.
Yes, everywhere.
My friends have, a couple of my friends have lost or nearly lost deals because the bank has gone from 75% LTV to loan to value to 50% loan to value.
50, yes.
So
yes, this is a real problem, which I spoke about in a previous program. Not only have they changed their LTV ratios, but in addition, their asset values on the LTVs have changed. So they're now actually becoming distressed debts. So it's a little bit more complicated. And there are opportunities because of this, because of bank strategy, which is really an artificial situation. And it's basically musical chairs of one bank moving to another.
Yes. So to summarize your question, in general, the sophisticated investors have remained invested, did not dramatically change their asset allocation.
Okay, that's important. And so therefore, but one of the things I noticed in the past, that a lot of family offices were not very sophisticated in private equity because they lacked the know-how or knowledge, although they wanted to dip their toe in the market. You mentioned earlier about technology. Are you actually seeing then that they're now becoming to have a more open mind to different sectors of the market than they had before?
Yes, I mean, technology is no longer an open or new segment. It's been there. And I think we are able to have this call and live in the digital world because of that technology revolution we had. I mean, one of your previous questions was how we have managed to survive this crisis or confinement. With the technology we have available, we were surprised to see how we as a company and also our clients were able to work fully from home. So without having to, I think the last day we went to the office was 18th of March. And we've been operating effectively and working from home. And probably,
so Ankush, just a question tongue in cheek. Do you still need an office?
I don't think my office provider would like the answer, but we have already been discussing with our staff that do we actually need such a big office? So we're already thinking when our lease expires to not necessarily take such a big office. The good thing with the big office is that when the lockdown is over, we can maintain social distancing because our office is quite big, so we can sit in different parts.
But Ankush, I was talking to a major company, a worldwide brand, only earlier this week, and they said to me, what's nice about being in the office is chatting in the hall and actually exchanging ideas. When you're working online, you lose, to use an acronym, the gossip. Do you basically think that's important to your business model or not important? Do you need to have that physical contact of meeting somebody in the corridor and having a chat? Or do you think from a business point of view, you can do it online?
I think the team spirit part is very important. So for me, that would be the most important element. I mean, discipline would have been another, but I think we've managed to now disciplinize. I mean, I have a couple of my colleagues who are living in flats with young children, so that's a bit of a challenge to work for them. But I'm not so concerned about the chats in the corridors. I'm more concerned about the team spirits we create while being together in an office environment.
So would you say then that one could work a couple of days a week or a couple of days every 2 weeks in the office environment and the rest from home? Or do you not think that business model would work?
So for our business, when the lockdown is over, we are already planning everybody to have at least 2 days per week work from home, at least.
So you think it is a realistic, and the reason I ask that is Bespoke, would you suggest me investing into offices at the moment?
I mean, so we have just onboarded a client which is very much focusing on commercial offices, but which are rented to high-tech companies. So it's an interesting change of strategy where this firm is very much trying to take advantage and go for more technology tenants. But in general speaking, office sector has been quite badly hit and will probably be badly hit. People are going to work from home more. The same way retail, hotels, and similar asset classes. I mean, logistics, industrial is probably doing very well. Assisted living might actually do better. Senior living, and so on.
What about residential? Ankush, you had some major residential developer clients, and I came across once with you. Would you say that now, I mean, people want to live in the country? I mean, I had another client this week that said, I'm normally living in Paris. Another one said, I'm normally living in London. And they both said, I now want to move out to the country and work from home and just commute to the office as little as possible and do my job from home. Do you think there's going to be a shift in the residential wishes? And obviously, which segments of the market are we talking about? Are we talking about the low market, the middle market, or the up market? Because if you've got major Americans, I think, doing major development for rent in places like the outskirts of London, how do you see this current situation changing?
Residential so far is looking to be quite defensive to the current situation. We've spoken to a few residential clients of ours, and they think that their asset class will be fine, will actually quite robust, because the more people work from home, the more they need high quality residential. So some of the developers I have spoken to in UK, they are just waiting for construction related activities to be lifted because they want to develop. And
now, Ankush, I know that your company is fairly international. Just looking at you, we know you're international, which is a compliment because half the government are of your origins in the United Kingdom. I don't think there's a Brit anymore running anything in the UK, but even the head of the Bank of England, I think, is a Canadian. So if I were to, joking apart, say, you're involved in the Scandinavia or you're involved in the Middle East, why are you involved in Switzerland, Scandinavia, and the Middle East? What is the reasons for you actually, with Bespoke, being in those places?
So UK, Switzerland is always known as a strong ultra high net worth family office market. If you noticed in London, there was a survey a few months ago which says there are 1,000 single family offices based in London. I'm just talking London, not even UK, with a combined assets under management of 1 trillion. Now, these are not all UK families. These are a lot of international families. And we saw that in Brexit, where number of international families were setting up a private office desk. So we have a lot of international families running their private offices from London because they feel even post-Brexit, this is going to be an important city, an important segment. I mean, Switzerland has always been a very strong wealth management market, private banking market. Sweden, Norway, Denmark, Finland has very strong pockets of institutional investors, pension funds, insurance companies we deal with. I think Sweden alone is on the 8th largest institutional market in the world alone, and Nordics combined, definitely in the top 4. Middle East, everybody knows the extent of capital, but we have a desk there in UAE, predominantly because we really want to create that bridge between Middle East and developed economies investments.
But which way are you doing it? I mean, are these Middle Eastern Swedish funds looking for investors, or is it people there looking to invest? What is the actual business model that we understand?
The second. So our investor base, the 600 investors I mentioned, are spread between UK, Switzerland, the 4 countries in Nordics, and about the 5 countries we cover in the Middle East.
So you have 600 families that follow you?
Ultra high net worth family offices and few institutional investors.
So you're as bespoke as Art TV then, and Lux TV in the same market. I now understand why Gianluca invited you.
Yeah.
No, thank you.
Yeah.
Tell us more about off-market opportunity. Do you manage it? What do you think about?
Yes, I mean, this term is widely used in the real estate segment. I think family offices, we noticed, stopped going into what we call blind pool funds in real estate a few years ago and have a much stronger preference to go into deal by deal or co-invest. But, you know, the value of the properties can be very much driven by if they are off market or not. And everybody likes an off market deal, particularly family offices who want to keep themselves confidential, want to complete the deal without anyone knowing about it. Thankfully, we have access to a lot of asset managers which can source those deals on the ground. So from the investment opportunities perspective, like I said, we cover UK, US, and the developed part of Europe.
In Monaco, we see a lot of people buying residential and commercial for the security, not necessarily yield, because the yield is very low in Monaco compared to other countries, but for security of funds in real estate, it's a good area.
Andre, at one time, the Swedish were investing very heavily into other parts of Europe with very little yield, on the basis it was like a pension fund. It was a long-term investment, and people have actually been doing this, and it's actually quite interesting.
I mean, over the past years, just to finish on that topic, real estate has generated steady cash flows. We've had a very good run on real estate for quite a few years now, returning very interesting capital preservation as what people see it. And with the fixed income market now affected, the bond market affected, we actually spoke a few weeks ago to some very large institutional investors in Scandinavia through our team. And the feedback is that they want to increase their allocation in real assets, including real estate. Because when the bonds stop, I mean, even government bonds, which are supposed to be the most secure thing on the planet, are not producing the kind of return people need. So people have to go to...
This is quite serious, because a lot of people in banking have, when you had the Monte Paschi Bank, the Monte Paschi Bank in the 2008 crisis, which Gianluca probably remembers, because it's an Italian bank, they invested into the Italian government stock. It was nearly the end of the bank, because there was, in the crisis, nobody wanted government stock. In this current situation, a lot of people have invested into corporate debt. The corporate debt has substantially reduced in value, unjustifiably, because we haven't got the crisis. But the banks look at LTV, loan to value, which has created problems. Now, there's a lot of families that don't need debt. They actually buy for cash and they don't raise debt. I've come across quite a lot of families like this, which is why I asked you the question earlier, Ankush. But if I was to say to you today, I mean, Gianluca's in art. Your families are basically investing in property, investing in everything. But they also invest into art, which is why we are today on Art TV. Also wine. What experience have you seen of families in art and wine? And watches for Andre.
And watches.
Ankush.
I mean, art and wine is not really our specialization, but I'm actually invited to an art and wine investment webinar this week. I haven't attended it yet. I could have probably told you more about it. But I mean, I think these are in general uncorrelated assets, and particularly wine. I think with everybody in lockdown, I don't drink alcohol, but a lot of my friends do and my family members do. And I think the consumption has only increased.
Yes, we're finishing off the cellars at the moment. We have to restock soon. I think the auctions in wine is going to be increased because all of us have been consuming.
And it's uncorrelated to the market. So if you look
at you say that, Ankush, but we're seeing risk, and people have been looking at gold, for example. Now, do you not consider that your families maybe should be considering art as an alternative to gold and actually as a serious investment as part of their portfolio and put a percentage of the portfolio, and that's something you should perhaps be thinking about?
I think that could be a good idea. I'm not, like I said, I'm not an art specialist, but I would imagine that the way gold is going crazy and the price what it is right now, could it be a bubble? And, you know, art is something which is always going to be there and appreciated. And
so,
the older
Gianluca,
it is...
on this question, as the expert on art, would you basically...
It depends on the artist. Normally, if you buy in the right way, the price goes up, always. It means that if you invest in a big master, 10 millions, 5 millions, normally you earn from 20 to 30% more, or you can also double the prices.
Are we basically saying, Ankush, that we should be inviting Gianluca to do a conference on art for you, rather than you speaking on Gianluca's television program?
I think it's vice versa. Absolutely. Absolutely. I'm not an expert in art at all.
We could organize. Why not? It's a good idea.
That's right.
Maybe this could be another solution.
I mean, if you just look at, sorry, Robert. If you just look at Basquiat, for example, over the last 5 years, the value's increased 23% year on year. You know, and the last piece last year sold for over 100 million. So, you know, if you look at that, 23% every year, it's amazing.
So, André, if we go to the philosophy of Warren Buffett of stock picking, we should be using the word art picking and actually have the knowledge, art picking. And Ankush should perhaps be offering that facility to his 600 families to see what we can do on art picking with Gianluca. Anyway, exactly. Ankush, coming back onto track, but I thought it was an interesting point.
Yeah. I have a question for Ankush. A good question from a friend. What added value do you bring to our listeners that they can't find themselves by their banks, current advisors, or the internet? Which is your...
It's a very good question. Unfortunately, I'm not a genius who can advise people better than their bankers or professional advisors or something you can't find on the internet. But, you know, we like to, at Bespoke, we very much like to keep things simple. We work exceptionally hard. They say when the going gets tough, when the tough gets going. And, you know, and very much, I think what we have learned from the 2008 crisis is that those that succeed in strengthening their position through this crisis will go beyond just adapting. They will have taken bold actions, deepen their relationship with their employees, investors, end users, stakeholders, and hopefully we come out stronger from this situation. But you know, we like to focus on areas of our strength. Alternative investments is very much our area of strength. We've tracked
which what leads me to the next question, Ankush, to keep going, because obviously time is of the essence. What I want to understand is the profile today of investors are the techies, which may have 25 years old to 40 years old, who have money which they don't know what to do with. Now, you've got the cryptocurrencies, you've got the digital currencies, and you've got technology and digitalization. Could you expand that if we had some of these young people who said, what the hell do I do? Because everybody I've seen, I'm a footballer, everybody loses my money. I had one Australian client and said, every time I go to anybody, I'm a bad luck charm because they always lose my money. How would you approach this type of problem to deal with something like that, Ankush?
So alternative investments, which I said we are very bullish about. I mean, if you track alternatives, they're one of the largest asset classes in terms of growth. 10.3 trillion in AUM across alternatives as of June 2019, which is expected to reach 14 trillion by 2023. This is per Preqin data, which is one of the good data sources for alternatives. Now, why?
You will lose our listeners with that,
Yes.
or our viewers. Just keep to the facts, because it'll be over everybody's head. Go on, Ankush.
So just to understand why a high net worth or family office goes into alternatives, very simple reasons. Number one, diversification, high risk adjusted returns, low correlation to other asset classes, inflation hedge, reliable income stream, reduced portfolio volatility. So in simple words, when you said what the young millennials or the high net worths in that range of 24 to 40 should be looking at, I think the first thing is diversification. You can't put all your eggs in one basket. Then you talked about technology. I think technology is a very interesting...
Well, let's just slow down a little bit. I come to you, and I know you're not a wealth manager, Ankush, but
Yes.
you are actually setting up these events online, or however you do it. I think you need to explain that as well, the practical side of how it works. And I come to you with my £2 million I've just made on my stock options. Can you please explain to our viewers exactly how you work and what you would do with them, so we understand how it would happen? Because, to be honest, I'm totally lost.
As you rightly said, we're not a wealth manager, so we can't give wealth management advice to those people, and I don't want to act like one also. We are a connector to some very interesting off-market niche boutique opportunities, which these high net worths or family offices would not normally have access to, as you said, through their banks or wealth advisors and so on.
So you were being modest before when you said you can find everything online, because that was just modesty, but not the reality.
To an extent. And, it's very important to understand what is the objective. And the first, I think, thing people will say in this current climate is wealth preservation. And I've heard this word so many times from our clientele.
Yeah, but I'm a young person. I want to make money. I've got time. I may make it again. I'm not interested in all this issue. I want you to tell me what I should be doing, please, and to cut all the rubbish that everyone else is saying, the banks selling their own products, this one doing that one selling that one. Give me some specific focus of what Bespoke Connections will bring to me.
First thing, don't lose it. If you've earned it, don't lose it.
So how do I not lose it, and what are you going to tell me to do?
Diversification. And I think each family office, we have noticed, they go and invest in areas they feel comfortable with or is connected to their own businesses. This is something very common.
Ankush, be very practical. I come to you, give me a mechanic. I'm your new family where I want you to help me. What are you going to do for me? I want to know what you're going to do. You still haven't told me. Will you invite me online? Will you present me to somebody? What are you going to do? I don't know.
The first step is to really understand the objective in terms of the risk profile, how much risk they do want to take, what is their return profile. So, for example, if the person says, I will want to make 20% return per annum, then they have to go into slightly higher risky opportunities like technology.
So what was your next step? I want my 20% per annum. What will you do?
Yes. So if next step is technology, I mean, if you take technology as an example, and within that you look at venture capital as a sector, we have already, Sequoia, I don't know if everybody knows Sequoia, it's one of the largest venture capital players in the world. They made a statement in March saying this crisis is the new black swan. And
I think a lot of people saw this publicly, yes.
Yes, they wrote, I think, a letter to all their portfolio companies
Just be very pragmatic, Ankush. I don't want generalities. I want specifics. So our viewers need to understand specifics. So what I want you to say to me is, you ring me on the phone, I listen to what you have to say. I'm not a wealth manager. Are you going to put me in front of somebody that's going to meet the profile? Are you going to introduce me to a fund? Are you going to introduce me to a product? I want to know what you're doing. If I want to go and buy a watch, I go into Hermes shop and I buy a handbag, I buy a watch, or I go to André and I can't afford it.
No, you come to me.
Exactly. But what I want to know is pragmatically, somebody who's watching this program, what do they do pragmatically? Not generalities and philosophy, but from a practical, step-by-step point of view. Can you please lead us through that? Because we're going around, but we're not really addressing the issue.
Sure. I mean, I can actually use a case study to give you an
then
example.
let's do that. Let's do that.
So we have a family office in Europe who already in beginning of this year decided they were going to invest a big portion of their allocation in venture capital. They're convinced.
Sure.
Within COVID, they haven't massively changed, but what they are asking us is, what are the subsectors in venture capital which potentially could be quite attractive? So gaming, for example, we've just onboarded a client in gaming. I'm not a big gamer myself, but there's stats showing where gaming has actually come out in a more positive way.
So let's take this client as a case study. Please tell me what you've done for the client without obviously naming the client.
So in that case, if they are interested in that sector, we have a very interesting boutique asset manager specializing and for many years working in the gaming sector. And we would then connect them to the asset manager in gaming. And the family office will independently, after reviewing the opportunity, decide if they want to invest it. So as the name said, we are
one project or many projects. I say, listen, I have
it could be
50 million I want to invest. How many people are you going to introduce me to?
So you will probably not put all 50 million in gaming. So you will say, I want to put a part of that in alternatives, within which a part of that in venture capital, within which I like gaming, I like mobility, I like maybe another asset class. Everybody knows Spotify, for example. I'm not sure if everybody knows that Spotify was born in the middle of recession. There was a small interview from one of the big investors, which is one of the early actually investors in Spotify, and a Swedish investor. And he was one of the first investors in Spotify, leading the A round in 2008. His two multi-billion-dollar liquidity events in 2018 helped land him in the #2 slot on Forbes Midas Europe.
That's generalities again.
Yes.
I want specifics. I want to know that, go back to my client. We have a listener or a viewer who basically has 1 million to invest. And they said, that means with your formula, which you said before, I can put 250,000 into 4 different companies because the time is such that I can do it. Okay.
Yes.
And I say, I want medium risk. I want growth. Can you find me 4 companies or 4 off-market opportunities, saying to me, I'll tell you which countries. I want Scandinavia, I want America, I want UK, I want Europe. What are you going to do pragmatically, and why you and as opposed to somebody else?
So yes, no, good question. And we already have live clients which have these opportunities and are ready to raise money. And very likely this client of yours doesn't have access to these. These are underlying off-market opportunities spread between venture capital, private equity, and real estate. So if the person says, this is my risk profile spread out, and I want to diversify, what are the pockets in real estate? We can show them industrial, logistics, warehouse opportunities. As I said, it's one of the robust.
Let's keep digital. Let's go digital. What can you do in digital, and not casinos, and not Spotify? What can you do in digital?
So in technology, we have some very interesting venture capital funds in Europe, also access in US if they want to diversify. I mean, a fund is always a good way to diversify for a new coming investor. If an investor is not invested in early stage tech, not overly familiar with the space, it's always good to go with a fund manager, somebody who's raised, fund 1, 2, and then maybe on their 3rd fund or 4th fund. Not necessarily a first-time fund, could be quite risky depending on the risk profile. But family offices have been one of the main investors in first-time funds, as per a lot of data on the market. So fund is the good starting point. If it's got $1 million to invest, it's a good idea to diversify and put money in a fund, which will then further diversify. So if I take the gaming fund as an example, or another VC fund we have raising 100 million in Europe, that 100 million.
Your VC fund is raised into what sectors?
It's mostly digital, so they are sector agnostic, but mostly, so it's tech, digital, but could be a variety of technologies. For example, AI, blockchain.
But Ankush, so our viewers once again understand, why should they go to Ankush for these off-market? Why should we trust you?
You don't need to trust us, because you will do your own due diligence on these deals. We don't advise anybody to invest. We don't tell them they should invest in this place. Normally, family offices, as I said, are quite sophisticated. They know what sort of risk return profile they want to achieve. They know the sectors they want to go into, and we connect them with these boutique opportunities, which normally are not presented to them by their banks and wealth advisors.
Sorry, go on.
Sorry, a lot of these boutique opportunities. So if I'm talking about a fund who is raising 50 to 100 million and is a boutique fund raising fund number 3, this fund would have not reached the level to be able to be seen or spotted by the big wealth managers or the big private banks.
So just to simplify, Ankush, a second, so our viewers understand again, and I'm sorry to keep giving you a hard time.
No,
but
okay.
What you're really saying is the ultra high net worth person and wealth person will source certain deals because they have the know-how and the team to do it. But the middle of the road and the lower person does not have that facility, or some of them don't have the facilities on the larger scale. So what you're doing is you're opening up opportunities to people who otherwise would not know them or see them. Is that what I've understood correctly?
Yes, that's a good summary. Yeah.
Okay. So therefore, what you're then saying is I need to define what those opportunities are, and then effectively focus a match as a matrimonial agency in finance, if we wanted to use by speed dating, but financial speed dating, the actual person with the opportunity, but then it's for them to carry out their own due diligence and take advice, because you're not wealth managers, you're just connectors. Is that a fair summary?
Yes, that's a very good summary.
Now, why should some of those people come to you? What is the motivation? Why would those people, if there's such great opportunities, why are they using Bespoke? Is it for your network of your 600 families that they're coming to you, which is why you're in a position of preferential opportunity?
Yes, again, I'm going to use a live case study from a European client, a German client, who said to us that they can, if they really, really have to or want to, access those 600 investors globally by themselves, but it will cost them $500,000 a year of hiring team members across 12 countries to do so. And it will take them 2-3 years to really get connected and build that level of relationship to get taken seriously by a family office. We can do that in 6 months and probably 1/10 of the cost for them. So this is the main reason they are using us.
And so far, you've had what type of success track record in raising investments into these opportunities?
So we've had an interesting journey to our business. Started in 2012, mainly as a conference company. Then we started converting into bespoke conferences. And towards the end of last year, we have stopped doing conferences, and it was probably well-timed, and converted into more capital introduction business in a very niche boutique way, and then specialize ourselves within certain segments in real estate, certain segments in technology, and a bit of private equity. So stopping conferences, I think, was a very good idea, considering currently all conferences have come to a halt, and the webinars is the new way forward. And if you look at Zoom, Zoom has had a 100% plus increase in their share value only in 3 months.
Okay. Now, if one looks at crypto and crypto exchanges and platforms, what is your body feeling in terms of crypto?
Crypto, again, is an uncorrelated asset class. It is kind of becoming a proper alternative asset class. But we have seen investors more interested in the underlying blockchain technologies than just standard cryptocurrencies, because cryptocurrencies have had a up and down over the last few years, and quite a bit of up and down as well. But the underlying blockchain technology will stay, and it will do well. But within the current crisis, we are now seeing the solid parts of the crypto climate is coming back. Some exchanges are starting up. We have actually onboarded a client recently, which have created a very sophisticated product, which again diversifies across cryptocurrencies through an exchange. So the underlying risk can be taken care, and banks and wealth managers can potentially distribute that to their clientele.
So you think it's not dead, there's a future, but one needs to be careful.
Yes, yes. But the blockchain technology as a whole is now being replicated in across sectors. The same with AI and deep tech.
Now, if a family office...
the time is over. We are running...
well, we'll just
fast.
do the last question for Ankush. If a family office is interested in you, Ankush, what should they do and how do they find you? Is it open to other people or is it a closed shop? I mean, I've got my money to invest. Can I contact you or is it not possible?
Absolutely. Very privately, you can contact us because one of the main things
we will see
as soon as possible
is the fees. So if people want to contact Ankush, we will see his infos. I'm looking for financial support and ideas. Thanks. Wonderful discussion. This is a good discussion. Okay, here we are. Bespoke Connection, all your infos, okay?
Yes, and I'm also on LinkedIn. You can also email me, ankush.mehta@bespokeconnections.com. We're very easy to find. Details are on our website. You can go on our team page on our website, click on different individuals' LinkedIn profiles, connect us on LinkedIn. We absolutely take seriously the privacy of family office and a high net worth, but we have not put any layers for them to not be able to contact us, so they can very easily contact us.
Okay, so be safe, everybody, and keep in good health. Gianluca?
Thank you very much, Ankush. We must speak about our conversation about art. No?
Yes. Absolutely. Once I've done the wine webinar, then I can give you some more update on that as well. But thank you so much. It's been a pleasure.
With wine, we will do a meeting with wine and we will speak about art.
Yes, thank you. Thank you so much, guys. Stay safe.
Well, now we will see Bespoke Connection experiences through our video. Thanks a lot, Robert. Thank you very much.
Thank
you. Nice to see you all.
Thanks, Robert.
Thank you.
Thanks,
and see you soon.
See you soon.
Hello, I'm Martin Stein. I'm the founder and managing director of Blackford Capital. We are here in London to meet with a number of prospective limited partners. We were introduced to a great network of single-family and multifamily offices by Bespoke Connections.
We are looking forward to follow up with most of the people we've met today, just because they're covering our range of interests, such as property developments and investing into property developments.
I enjoyed the Bespoke Connections experience purely because of the friendliness and the loyalty amongst all the people involved today. I think the investment opportunities that were presented today are extremely relevant to the marketplace, and the discussions that have been held are very exciting for the future.
I would definitely recommend Bespoke to other companies that are in our position, that are looking to grow, looking to meet new potential investors, and it's definitely worth signing up. It's the second time we've done it, so that really should tell you that we get a lot of benefit from this.
Hello, my name is Bernard Louis Roch. I'm general partner and co-founder of Truffle Capital. We are a VC fund with a focus on fintech and entrepreneurial DNA. We selected Bespoke Connections because they have a very efficient way of selecting pre-qualified family offices, and that fits into our targets, and the process is very professionally